Hello, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? So today I'm reporting live from Langhorne, Pennsylvania. So that's why for my YouTube people, if you see me on the camera right now, I'm in a hotel room. And actually, this is a really nice hotel room. Sheraton's, love y'all. You guys are great. But anyways, here in a few hours, I'm going to be heading over to Larry Steinhaus's office, about 10 minutes away from the venue. And we have some live presentations going on today. And then tomorrow, I'm heading out. I got a very early flight, like around like 7 a.m. I'm going to go meet my mother over in San Francisco. And we have a really cool trip planned out. So we're going to meet there. We're meeting there like at the same time. So I land at like 12:40 California time. I think she's getting in around 12:15. And then I booked us a rental car. What we're going to do, we're going to stay in Napa for about 2 nights, go do some shopping, go do like one winery or so. And then we're going to drive down the coast and we're going to go to Hearst Castle. Okay. Never been to Hearst Castle. Mom always tells me stories. I guess when I was a young baby, her and her mother went out there and did this whole entire trip. And mom says that I was like on her chest, like in a backpack. That's how young I was. So it's kind of like full circle. It's kind of fun. This is like a generational trip and vacation that mothers are going on. So it started off with we call her Nanny, my grandma. So Nanny and mom doing it. And then now mom and I are going to do it. And mom, can't promise you if you're listening to me that I'll have children, but we can take the kitty cats for the next generation trip in about 20 years. So it's going to be fun. So then we got to go to Hearst Castle. We're going to do a day there. And then we're going to keep driving down the coast. And again, I want to take the coast highway, like really follow along the coast. I could hop on, I think it's I-10, if I'm thinking about it correctly, or is that I-90? Whatever. So right, it's that highway that goes north and south right there in California. So, I could take that highway, but I'm like, Mom, I want to do the coast trip. So then we're going to drive down after Hearst Castle. And then I have 2 speaking events coming up next week in Rancho Cucamonga. So I'll be out there 2 nights for 2 different folks. One gentleman I actually met through the Pace Morby Sub 2 Gator community. He's a client and he says, hey, I host these weekly, monthly RIA meetups. Will you come since you're already going to be here? Will you come and speak to my people? So got that lined up. And then on Thursday night, it's going to be Mr. Justin Lofty. Justin is amazing, y'all. He actually has his own podcast too called Dad Investors. He's an amazing gentleman. He's got 2 little girls. He's got a wife, and actually, he's thinking about moving back to the Colorado area because he is a vet, and that's where he was stationed at for a long, long time. He loves the Colorado area. So anywho, so those events are going on. And then after that, we're going to keep driving south a little bit. And I booked Mom and I 2 nights at the Four Seasons Beverly Hills. And we're going to do like a big glamorous thing, go to the spa, go shopping on Rodeo Drive. And then on Sunday, we got a ticket from LAX back home to MCO in Orlando. So it is going to be really fun. Anyways, I just want to update all of y'all on all the travels. It's been really nice. I've been home for the last 3 weeks, and that's really been great for settling into my house still. Oh my gosh, y'all, I moved in January, and it just takes so long just to get your house all organized and set up, decorations and different things. Literally just got the podcast studio set up this past week. So shout out to Matt, my best girlfriend, helps me on the podcast show and running my social media accounts. And an update there too, Mads is actually, she's going to go back to school. She wants to get into the production television world and sports and different things. So I was just like, Mads, I fully support you. Go do what your passions are and what you want to do with your life. So I'm kind of sad to see her go, but she's like, hey, I just want to go do the schooling, and hopefully maybe in the future we can come back together and connect and do some more collab work together. So a lot of fun and exciting changes happening. And I guess my big PSA for the community is accept these transitions in life. This is life. It's never going to be stagnant. We're going to have good days. We're going to have bad days. There's going to be some weird transition days. But if you notice, it all seems to work out, doesn't it? So one thing I've really been getting my mind on is don't stress. Don't stress about the petty stuff or things that you cannot control. You can only control what you can control. So it's been great. So with that being said, y'all, I'm not going to be having an episode next week. It's just been crazy, crazy. I'm a little bit behind on my recordings in the archive here. So bear with me. We've been pretty consecutive. I think this is going to be episode 120, 121. And it's been so fun. I like being here and just talking to y'all every single week. But I won't be here next week. Forgive me, but I'll be back on the following week with some more content. Chris Noggle's actually coming on, so I got another recording scheduled with him. We got some cool things I want to talk about. So with that being said, in today's episode, I want to walk through the history, I was about to say historical, but the history of the infinite banking concept and some famous stories of how businesses and families have gotten started by leveraging the whole life policy cash values to go start the business or pay for payroll for their company, put back into the business, maybe for advertising campaigns and different things. So that's the fun thing about this concept, the infinite banking concept. You can use the cash values in your policy for anything and everything. All right. So I get that question a lot, because they're kind of comparing it to their traditional accounts like a Roth IRA, 401ks, my brokerage accounts. Hey, can I use this money for anything? Or am I limited here? What about taxes and blah, blah, blah. So also, since I guess I'm on that topic, y'all, if you really want to get deeper into this stuff, the mastermind's coming up. We're about, I don't know, 60 days, not even like 30 days from the time this episode airs, but kind of in the middle. Let's call it 45 days. So about 45 days to the live October mastermind that's happening in Nashville, Tennessee. So October 10th to October 12th, downtown Nashville, about a block away from Broadway Street. You can go and snag your tickets at themoneymultiplier.com/mastermind 2024. So without further ado, let's get into the episode. All right, everybody. So if you are listening to this auditory, you totally can. For my YouTube people watching, I'm going to put up like a slideshow because I just have some like different stories and I want y'all to kind of see the verbiage that are coming from these different stories. So grab your beverage. I'm drinking my coffee this morning, a little Sheraton coffee here. It's actually the hotel room coffee. I'm not a huge coffee snob. But it's nice to like treat yourself. But I'm telling you, hotel coffee is really not that bad, right? Anyways, just my unpopular opinion. So I want to get this pulled up here. All right. So now everybody should be able to see my screen here for my YouTube people. If this is your first time ever being introduced to the infinite banking concept, I would pause the episode and I would go to our website, themoneymultiplier.com/presentation, and click on watch Brent now. Brent's my father. But there is a good starting point just to understand the foundation of what is this concept? Why do we want to practice infinite banking, privatized banking? What's all going on here, So if you are seeing my screen here, if you scan that QR code, that will take you directly to the presentation. So I would start there if you haven't seen it, or for my folks who have been hanging around the campfire for a little bit, maybe even go there and rewatch it. It may be a good refresher for y'all, or go directly to the source. Go out there, get that black book, Becoming Your Own Banker by R. Nelson Nash, because that's what I call the Bible to the infinite banking concept. So does this really work and who uses this? So I kind of want to just walk you through a few examples here of real life stories of people who are using whole life insurance policies. And two, I didn't even add this into my little slideshow here, but remember y'all, The number one purchasers of whole life insurance in the world are commercial conventional banks. And banks actually own more in whole life insurance than all of their land and their buildings combined. So if you go out there and Google BOLI, BOLI, it stands for bank owned life insurance. You can go and do your research of how much whole life insurance that these banks actually own. And it's right up there underneath their tier one assets. They own a crap load in whole life insurance. And I kind of make the joke when I'm teaching this on stage. Is it because they're stupid, or do they know something the rest of us just don't know about? So I'm not out here reinventing the wheel. I mean, this concept's been around even longer than our tax code's been here. Tax code's only been here since 1913. So there's so much that you can do inside of a whole life insurance policy with a mutually owned insurance company that you can't do with any other vehicle on the planet. So something else I want to note as well is when we're talking specifically to the infinite banking concept, these policies need to be designed specifically for high cash value banking. So what I mean by that is when you put $1 inside of that policy, then immediately, my definition of immediately is within 30 days, we have a cash value that we can pull from the policy. Policy loans, yes, you could take out withdrawals if you wanted to. I'm going to do a whole episode here soon on the differences between policy loans and withdrawals, but you can start taking out that cash value from the policy. I recommend policy loans so you don't interrupt that compounding that's happening in the policy, but it's got to be designed specifically for high cash value banking. Now, let me be clear here, because a whole life policy has always built up equity in cash. But a traditional whole life policy, like if you just go buy it off the shelf from State Farm, Nationwide, those big names that we all know the names of, it takes a while to build up the cash value until about year 4 to year 5 when it starts to actually show cash value in there. And the reason being is just because we're not overfunding it. We're not using that paid up additions rider to overfund it to allow us to have that immediate cash value access. So just a little background story before we kind of get into it. But look here, this is one example. This is an article that's dated November 16th, 2016. This article, actually, my dad found it. I remember this because I was with him. We were in Denver, Colorado, and we're about to get up on stage and do a presentation. And Dad's very big into the sports world. He likes to check all the scores and different things. My brothers are too. My mom and I, not so much. We're very big Kansas City Chiefs fans, right? Because that's where we grew up. But other than that, I really don't pay attention to sports. So this article came up when he was on there researching on ESPN the sports scores. Cash value life insurance makes Harborough College football's top paid coach. So the University of Michigan is using the policy cash value to pay Jim Harbaugh what's it called? I'm blanking right now. His salary. There we go. They literally use the cash values to go and pay his salaries. And the reason that they do this, they pull from the policy. My dad did the same thing in the chiropractic world when he had his associate docs and the CAs and the clinics. He would own a policy on them, then take out the cash values to then go pay his employees. And the reason he did this is because the whole idea is run the money through the policy first. Because once the money hits the policy, now starts that time clock of the uninterrupted compounding that policy is getting us. And then not to mention too, there's a death benefit on there. So God forbid, if Jim Harbaugh were to pass something, a freak accident were to happen to him, then the college is going to need that windfall of death benefit to find that replacement, because there's going to come a loss of income due to Jim Harbaugh passing away prematurely. Because I know we don't like to think about a whole lot, but it's not an if we die or graduate, it's a when I die and graduate. So that will get paid out. So look right here at this bottom little section here. What most people don't know is that the compensation strategy was designed to provide Harborough with millions of dollars of tax-free cash during retirement. It's one that can also be incredibly effective on much smaller scales. So, hey, they're even talking about the point of using the cash values to then fund for his retirement once he gets to that point. Same thing of what my father was doing over here with the chiropractic offices. We kind of call this man insurance, or what Chris Noggle likes to call it, COLI, corporate owned life insurance. There's I shouldn't say billion, but there's a lot of companies that are out there who are using this strategy, and it really is a win-win situation for the employer and that employee. Let's move on. Joe Biden, your president right now. Oh my gosh, y'all, let's not even talk about all the crap that's going on in the political environment right now in the television world. But anywho, love him or hate him, Joe Biden. Biden says he has no stocks, bonds, or savings accounts. So this article was posted on June 24th of 2014. Biden holds 4 checking accounts, and 2 of which he shares with his wife. In addition, he holds 6 life insurance policies with Mass Mutual, a company that we do business with. Why does he have these life insurance policies? He's using them. And then I don't know, I might, some of y'all might click off after I make this joke, but is it Biden that owns all of them, or is it Hunter that owns them? Okay, sorry, probably lost a few of y'all. Love you. Anyways, let's move on. Literally, the president of the United States, Joe Biden, is using these. How about Walt Disney? Disneyland. Walt wanted to start Disneyland, but after failing in the pursuits of traditional means of financing, so here's what I mean by that. Walt walked into a bank and he said, "Hey, Mr. Banker, I got this brilliant idea. It's called Mickey Mouse and Donald Duck. Will you give me a loan to start this mission and start my journey here?" The bankers laughed at Walt. They said, "No, man, that idea is stupid. I don't want to loan you money for that." So Walt had to do is he had to provide his own means of financing, and a large part of this came from collaterally borrowing money from his cash value life insurance. I mean, crap, y'all, who knows if Walt never had those policies or that source of money to fund this dream that he had, who knows if Disneyland would even be here right now. And now it's just grown into a billion-dollar organization. One thing that I actually learned, because, I live down in Daytona Beach, Florida, and Orlando is just right an hour away from me. There are literally communities. Go and look this up on YouTube. It's really interesting. There's a community that is built on Disneyland's grounds, and it's a residential living community. And you can go look it up because there's some creators and maybe some television programs kind of funded and shot this too. But in their designs inside of their house, it's all Disney themed. There's like a Toy Story room, there's a Mickey Mouse room. And it's just really, really cool, like Pixar animations. Ooh, speaking of, okay, let my ADD run for a second. My good friend Joy, she was so mad at me because I've never seen the movie The Lorax, and I've never seen the movie Wall-E. And now she made like a funny comment because I was over here like talking about what I want to do in my lifetime and making movements. And she goes, "Hannah, hold on. Before you go and save the world, you need to go watch The Lorax and you need to go watch Wall-E." So I knocked one off my list. I watched The Lorax, but I still got to go watch Wall-E. I recommend all of my listeners go and watch those movies. They have such a powerful message behind them. But The Lorax, the Speaker of the Trees, it was just really, really good. So anyways, side note, I love the Pixar animations and that whole world. But Walt Disney, I mean, he used his cash values from his policy to go and fund for Disneyland. What about Ray Kroc? Ray Kroc with McDonald's. Ray Kroc partnered with the McDonald's brothers and opened up their first McDonald's in 1955. Speaking of, there's a really good documentary on the startup of McDonald's, Ray Kroc, and the McDonald's brothers. I think it's on Netflix. I would go look that up. I don't know what it's called right now, but if you go Google McDonald's documentary Netflix, I bet you'll find it. But anyways, Because now I just really understand that, okay, it was the McDonald's brothers that started of it. Ray Kroc was the businessman, and McDonald's is really not a hamburger joint. It is, that's what they do, but it's really a real estate empire. So, anyways, so Kroc did not take salary for the first 8 years. And to help with cash flow, he borrowed money from his two cash value life insurance policies to help cover for the salaries of his key employees. So Kroc was doing the same thing, taking out the cash values to make sure that his employees, his workers, were good and taken care of, because that's our duty being a business owner and being an employer. But here's what he also did. He used some of the money for the advertising campaign that we know of as Ronald McDonald. So I haven't seen Ronald McDonald around in a little bit. If you've been seeing him, maybe he'll come back to the forefront here soon. Or like the Hamburglar and all those different characters, right? But he used it to fund for some of that advertising campaign and those marketing dollars. Because again, you can use the cash value for anything and everything that you want. How about Stanford University? Leland Stanford and his wife lost their son in 1884. In his memory, they started Leland Stanford Junior University. So following Leland's death in 1893, his wife tried to sell her jewelry collection, excuse me, not jewelry, her jewel collection, but couldn't raise enough money to save the university. She then used her husband's policy proceeds to avoid closure during a dangerous six-year period of financial distress. So, death benefit. Again, I know we don't talk about it a lot, but that death benefit comes in lump sum tax-free to that beneficiary. And beneficiaries can always be updated, be changed throughout the life of the policy. But it's so important because if you have a spouse that passes away, or an employee, or a business partner, you are going to need those funds to sustain you during that time of grief and maybe some economic catastrophe there. So, death benefit here is how the Stanford family used the policy to then keep continuing on with their business and their legacy. J.C. Penney. By 1912, James Cash Penney operated 34 stores. By 1929, he had 1,400 stores across the country. The stock market had crashed in 1929, and that was during the Great Depression era. And Penny's personal wealth went down as well. But he was able to borrow against his cash value of his life insurance policies to help the company meet its payrolls and its day-to-day expenses. So the company eventually rebounded. So with this, a lot of people, they don't understand how powerful of an asset a whole life insurance policy is, because I'm not going to get deep into it in today's episode, but there's a huge difference of how these mutually owned life insurance companies operate versus commercial banks, the Fed, and the government. And so during the time of the Great Depression, the 2008 era, these insurance companies were still paying out the surplus and dividends to their policyholders. They are not affected by what's going on in the stock market and the economic external factors that could dictate what they're doing, because they are not playing the same game that the commercial banks are playing. So there's reasons of why I feel safer keeping my wealth with the insurance companies rather than the local bank. And for my people, if you want to nerd out on it, Austrian economics. Go and really research Austrian economics, because that's how the insurance companies are operating on. And I would even go out there and read a book. It's called The Creature of Jekyll Island. Yes, it is a big book, but it's a very powerful book and takes you through some real life examples of what has happened since the Federal Reserve has came into establishment. Let's move on. How about the Pampered Chef? Using $3,000 she borrowed from her life insurance policy, Doris Christopher started the Pampered Chef in her suburban Chicago home in 1980. Speaking of the Pampered Chef, I even remember growing up like in Kansas City, you know how like all the ladies would get together and they have like a big Pampered Chef party. It was so funny because my one girlfriend, Sadie, she lives down here in Florida with me, in St. Augustine, just about 45 minutes north. We went to high school together, and funny enough, we ended up in Florida together. But Sadie literally hosted a Pampered Chef little party. I couldn't make it due to my travels, and she knows. Love you, Sadie. But it's kind of funny to see as I get older that some of my friends are even doing these Pampered Chef parties. Because okay, here's a quick little story, okay? When I was younger, I remember that there was this like a cinnamon crumble topping, and I would put it on my toast. I would put melted butter on it, and then I would put this cinnamon like a breadcrumb kind of topping. I ate so much of it one night, I literally got sick and I could never eat any more of it ever again. And so that was the last time I ever ate it. So that's when I think of the Pampered Chef. I always think about that crumbled cinnamon topping. Anywho, by 2002, the Pampered Chef had grown into a $700 million operation that then was acquired by Warren Buffett for $1.5 billion, billion with a B. And now, I mean, it's probably more since the time of this article, but it now serves over 12 million customers each and every day. I mean, that's a powerful, powerful story. Foster Farm. In 1939, a young couple named Max and Verda Foster borrowed $1,000 from their life insurance policy. They invested in an 80-acre farm and began to raise turkeys and eventually chickens. The Foster Farms is now 10,000 employees strong and has a line of products sold globally. So, I mean, this is how people are doing it. Instead of going down and begging the bank saying, hey, look at my dream, look at my passion. I'm going to show you my business idea and design here, business plan. You know, instead of having to go down and like convince investors to invest with you, these folks are able just to call into the insurance company and say, hey, I need $1,000. Can you send it to me? The insurance company doesn't ask any questions. They say, okay, do you want it direct deposited or do you want a paper check to you? Because a cash value in the whole life policy, owners, contractually, it states that policy owners hold first rights to any cash value that's inside of there. So they can never deny you that loan from the policy. So when we're using this, you know, we are able to go in there, call up the company, take out the money, use it for whatever we want, whenever we want. And we're not required to pay it back. I want you to, as being an honest banker, pay yourself back, charge yourself with interest. You know, don't steal the peas. That's a quote from Nelson Nash's book, Becoming Your Own Banker. But it's not a requirement to do so, because at the end of the day, the insurance company has a contractual promise that, hey, there's a death benefit on this policy, and we got to pay out this death benefit to your beneficiary at the time of your passing, because that's an exchange. If we are keep paying these premiums, keeping up our contractual commitment, then the insurance company has to keep up their contractual commitment with the guaranteed interest and the guaranteed death benefit that they have to pay. So that's why they never ask us what we're doing with the money, when we're going to pay it back, how we're going to pay it back, because they just simply don't care. They know that we all have an expiration date, and at that time, any outstanding loans will just get subtracted from the death benefit. So just a few quick examples there that I just wanted to run through with y'all. I know this was going to be a shorter episode, but I kind of just wanted to walk through real life historical events of how powerful this stuff really can be when you control the environment and you control where you're leaving your hard-earned money at. So if you want to learn more, I mean, here's my free gift to y'all. Send me an email, Hannah spelled the same way as forwards and backwards, Hannah at themoneymultiplier.com. And I'll send you a copy of this ebook, Mapping Out the Millionaire Mystery. So this is a book that my father and my business partner, Chris Noggle, wrote together. Go follow Chris Noggle out there on the social media channels, YouTube, Facebook, Instagram, TikTok. He's always posting free content out there. And the best thing that you can always do is just hit a follow button, hit a subscribe button, share his episodes. That's all we're asking. Because as my dad always says, and I say this probably every single episode, if you help enough people get what they want, you in return will get what you want. So send me an email, send you a copy of our ebook, Mapping Out the Millionaire Mystery. And this is like a spin-off of Nelson Nash's teachings in his black book, Becoming Your Own Banker. So this one I would say is an easier read. Like I read it like on a 4-hour flight when it first came out. But it's an easier read, but I would always say go back directly to the source of Becoming Your Own Banker and get that black book. And hey, all of this is on Audible too, Becoming Your Own Banker and also Mapping Out the Millionaire Mystery if you're more so of an audiobook listener. So that's my gift to y'all. Now, here's my contact information. Okay. You got my cell phone number right there. You can call me there. You can text me there. You got my calendar links. You got my team's calendar links and my email as well. So go really research this stuff, y'all. I know a lot of you know me. You are clients of mine. You work with us here at the Money Multiplier. But even if you don't want to practice this concept with us, just go out there and make sure that you're working with somebody who is an authorized infinite banking practitioner. So that's just, I would say, is the biggest requirement. And the second requirement I would say is that make sure they're doing this in their own life. They are practicing what they're preaching. We meet so many freaking financial advisors who are advising their clients to do things that they're not even doing. I mean, what's the morale in that, right? So I appreciate y'all for being here today on this short little episode. I thought it was just kind of interesting to go through some of these scenarios with y'all. Like I mentioned, I won't be here for next week. Okay, so I'm going to be on the road with Mama for a little bit, but I will be coming back here in about 2 weeks. Okay, so catch up on some episodes. All right, I'm always going through new material every single week. And then we got the YouTube channels, live events are always happening, webinars. Actually, as this episode airs, there is a 3-day webinar that's happening. And let me pull up the dates here. It's August 23rd. So it's literally this weekend, y'all. August 23rd to August 25th, 2024. Reach out to Chris Noggle or his assistant, Shauna. Shauna, SHAWNA, Shauna at chrisnoggle.com, and she will show you how you can sign up. These are it's a virtual 3-day advanced training. So I would say these are for the folks, definitely watch the presentation. And these are for my people who already have policies, just to expand deeper on our knowledge. So 3-day training is coming up this weekend. I hope to see y'all on. I will not be there, but my father will be there doing a segment and talking about some stuff. And then also even before that, hey, my California people, I'm going to see you on Wednesday, Rancho Cucamonga, Wednesday and Thursday night at Haven City Market. So I hope to see all of you out there as well. Text me, send me an email if you want to get more details on how you can join that as well. So with that being said, hey, if you're liking this stuff, subscribe to the YouTube channel, rate us 5 stars, leave a comment down below, and talk to me. What are some topics and episodes that you want me to elaborate on? What are some guests you want to bring on? I'll let you in on a little secret. Coming up here soon, I'm getting Chris Kirkpatrick on my show. He's a very big guy out there. Go look at him, Life 180 on YouTube. He talks a whole lot about IULs versus whole life and the different products that are out there on the market and why we prefer whole life for the infinite banking concept compared to other vehicles that you could use. All right, so got a lot of fun things in the works. So hopefully everybody's having a good summer. I love all of y'all, and thank you for all the support, and thank you for all the birthday wishes. So to all my fellow Leos out there, happy birthday to all of you. And until next week, I'll see everybody then. Bye, y'all.